Hello and welcome to another update video about ADA. ADA shows a positive response to our trading area, to the support area that we defined already a while ago. And remember a few days ago, even yesterday, I highlighted that, one more low or two more lows would be ideal to complete this structure. The price followed that forecast and showed one more low, maybe even two, I can't remember, but it certainly fulfilled the wave count that we had on the chart. And now shows a positive response. It could get one more low, yes, that's true. If this is not an impulse to the downside, but an ending diagonal, we might see another low. But as long as the low that formed today is holding, we might be watching for a rally in wave 5 now. Now, it's too early to confirm it, of course. We need to see more price data, but important is that there was a response to the support area and the wave count to the downside filled in. The market hit actually the next Fibonacci level there, the next Fibonacci target at 47.6 cents. And I'm going to zoom in a minute to take a look at the detailed wave count. But remember, if we zoom out a little bit, go to the 4-hour chart, the idea is that still a fifth wave is very much probable. Bear in mind, this is only a diagonal pattern. So in diagonals, let's say predictions are always to be taken with some caution. You know, that it's not an impulse, so it's not an ideal structure. Elliott wave helps us very much to understand what are ideal structures, what do we want to trade, what do we want to avoid. Diagonals aren't really ideal structures, okay? So they often change, they often morph. It can be a challenge because it's a bit more subjective than impulses, which can be identified in a very objective way. For example, if you ask 5 Elliott wave analysts for a wave count on this, you might get, I don't know, 3 to 5 different responses. When you have a very clean impulse, then you ask 5 analysts and you might get the same wave count from all of them, okay? Because impulses have very clear rules and guidelines that are being followed. They are typically what we want to trade, whereas diagonals, they might be nice to observe until a very reliable setup occurs. Until then, it's always a bit messy and can change. It's just worth to know this, okay? But we try to teach it all the time that not all patterns are reliable, of course, okay? Some people ask me, okay, how reliable is Elliott wave, okay? But I can tell you that it's not so easy to answer because it really depends on the structure we're looking at. Elliott wave is not a predictive method within a correction. It's not necessarily a predictive method within a diagonal, but it can still help you understand the relevant pivot points that we are looking at here. But when we deal with impulses, it's very predictive and very reliable. Okay, so it depends always on the structure. At the same time, Elliott wave then helps us to understand, okay, do we have an impulse? That means we might want to trade it, or do we have something else like a correction? We might want to avoid it. Very important, just from a mindset point of view, the right approach to, to really deal with Elliott wave to avoid disappointment. But yeah, one more high is still very much on the agenda here. That's my expectation, as long as the relevant support levels are holding. The key support level here that I'm watching is 34.5 cents. Break below that level will indicate that this structure is going to break and we cannot watch anymore for a fifth wave. I would even like to avoid a break below the 39-cent level. That's the 50% Fibonacci level, because a break below that level would already take the price out of this corrective price channel, and a break below the 50% Fibonacci level is never good. And also it would look a little bit out of proportion if the price was really coming down to the golden ratio. It could still rally. It would be a very deep wave 4 though. Not invalid, therefore we always allow the 61.8 retracement level in a diagonal pattern. Now let's take a look at the 1-hour chart. So now that we've established that we're looking for potential reversals here, in this entire move down, yeah, we highlighted we should go lower, should go lower, should go lower, one more low, and this happened. And now it's basically the first time where I say, okay, the low could be in, but it takes a little bit more price data to confirm, of course. We have seen a reaction to this, let's say the upper third of this box. This is the larger support box, but we were able to specify an additional target area within it, which pointed to the area between 43.8 cents and 50.7 cents here, with 3 Fibonacci levels in between, especially that 47.6 cent level in the middle of it. So we're still dealing with a structure where the wave 4 is likely unfolding, maybe completed now, and the structure unfolded as an A, B, C structure where the B wave is a triangle, and the C wave to the downside, then a 5-wave move. That's sort of what I've been following for the last few days here. And the C wave reached, yeah, the ideal target area because this is this white box. But obviously now we need to be watching. I mean, typically when the prices approach these areas, then we have to watch for reactions. Well, there is a reaction to the 1.236 extension, but bear in mind, yes, it's a nice reaction, but the price hasn't even taken out previous highs, so that needs to come next. For further confirmation and clarification, I want to see a break above the 53.2 cent level next, and then the next major level is at 58 cents, and then the next level is at 63.5 cents, which is the B wave high, okay? And if we can identify a first 5-wave move to the upside along the way, followed by a 3-wave pullback, that would be ideal. Please note that because we're dealing with a 5th wave and it's a diagonal, the move to the upside, if it already unfolds, it's likely an ABC structure. So identifying 5-wave movements is not necessarily easy. We might not even see a 5-wave move. So that's the problem when trading diagonals. It's more, you have to more rely on the fib levels because this A wave could be a 3-wave move. Okay, so we might not see a clear impulse. So it will all be, we have to still brace ourselves for changes and adjustments in the microstructure. Another aspect might be to add a trend line here to see if that trend line breaks, and it's not very reliable, this trend line, maybe. Because I think, yeah, we might just be at the breakout point. I don't know how reliable this trend line is, but it tries to break it. So it's just an additional indication that things are on the move. So I think the takeaway is the price did get into our target area. It shows a response where needed. And anybody who wanted to could have layered in. Obviously, you can still trade it how you want to do it. But it's way too early to confirm that a low has been established. But I'm certainly still watching for lows to form in this region. Maybe that's it. I think in the next few sessions we should know more. And the first deeper pullback will tell us likely the truth. Okay, the first deeper pullback. So if now this move continues, and let's say we get a deeper pullback and it's holding a higher low, then yeah, this is likely the setup to continue the pathway higher. It's just that we don't have a very clean impulse here because we're dealing with an overall diagonal. So we just have to be a little bit cautious and have to just prepare for potential frequent changes of the microstructure. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.